Trading is insanely difficult. If you ask me, I think it's one of the most difficult professions on this entire planet. And it doesn't matter if you're talking stocks, options, futures, crypto, or anything in between. 95% of traders end up worse off relative to where they started, as in most do not have an enjoyable time in the markets. So that begs the pretty obvious question, if so many traders fail, why do so many people try to do it? I'm just guessing here, but I would assume that the answer for most people is along the lines of the ultimate form of freedom. You get to do what you want, when you want, and you make a lot of money while doing it. Now that sounds pretty amazing, but the catch is the fact that only 1 in 20 people who attempt to do it are successful in doing it. And that brings me to the main point of this video. I want to talk about the 3 major things you should be focusing on if you want to transition from the 95% of traders who fail to the 5% of traders who succeed. But before we get to all of that, let me explain why you should give me a few minutes of your time, and you know I'm not some sort of random talking head on the internet. First of all, if we haven't met, hey, my name is Matt. Not that I think that really has an impact on me as a trader, but hey, that is my name and I like it. What you really need to know is that I've been trading for over 10 years, and the past 3 to 4 years, I've been making content on my entire journey. So not only have I had the unique opportunity to interact with over hundreds of thousands of traders, I myself am in the trenches every day. I've streamed it, I've made videos on it. I know many of you watching this right now know that I've had multiple 6-figure wins, and unfortunately, I've also had multiple 6-figure losses. So in reality, this video is my attempt at compressing years of learning from other traders, and more importantly, my own battle trading scars into bite-sized lessons so you have a better chance at avoiding the missteps that I took, and trust me, I took a lot of them. This video could easily be multiple hours long, but I also know none of us have time for that. So let me distill everything into 3 simple concepts. Number 1, edge. Number 2, sizing. And number 3, psychology. The first and most apparent mistake that I see most retail traders making is the fact that they're trading with no edge. Trading without a statistical edge will be the first thing that leads to your downfall. Time and time again, and hey, I'm no better. I did this myself, especially when I first started trading. Most people end up trading off of gut feelings. How many times have you heard your friends or you said it to yourself of, oh, this looks bullish. Oh, this looks bearish. What does that even possibly mean? It looks bearish. There's no empirical evidence. There's no data. There's no numbers. It is pure guessing. It is pure gut feel. And the one thing that will definitively lead to is your account going to zero. After engaging with literally over hundreds of thousands of traders, I've never met a single one whose gut is that good, where just their particular feelings or vibes on the day is good enough to be consistently profitable. I don't know if you've ever heard this, but one of the first things you should be doing is starting to look for the rules of your trading system. What has to be true for you to get into the trade and what has to be true for you to get out of the trade. You want to be a rules-based trader. You don't want to be a random guessing trader. When I first started trading, it was pretty difficult to get going down this pathway unless you had some sort of background in computer science or programming in general. Because even if you had this idea of, hey, I want to go long every Tuesday morning and close the position every Tuesday afternoon, you had to have an idea of how to actually code that up and back test it to realize, did you actually have an edge or not? Fortunately for all of us now, AI makes that incredibly simple. I spend way too many hours of my life now talking with Grok and ChatGPT and every other LLM just to see if I can get some sort of trading ideas. And guess what? I get them to do all the back testing for me, and I can actually isolate if I have a real edge or if I'm randomly guessing. And speaking of randomly guessing, be careful with the education space. And I know that's pretty rich coming from the guy who's trying to educate and you're watching this video, but there's a lot of people who learn something and they just regurgitate it and they don't really have the evidence or the stats or the data to back it up. Let me give you an example. How many times have we all heard that the head and shoulders technical pattern is bearish and you should be going short on the neckline breakdown? We all hear that. We've all learned that from technical analysis, and yet there's not too many people bringing up how often it works. When does it not work? Is it better on certain assets versus other ones? I feel like there's an entire array of questions that come afterwards, and yet so many traders stop at that first thing of, oh, head and shoulders is bearish. I should be bearish. I should go short. Not really knowing the fact that, hey, actually in reality on the S&P 500, it only works 83% of the time. That other 17% of the time, can we isolate it to know when to not take that trade? That's just a rough example of the types of questions you should be asking. And more importantly, I'm trying to illustrate illustrate the fact that just because a lot of people regurgitate the same things, maybe we should take the pathway of trust but verify. Just because we've heard something time and time again, that doesn't necessarily mean it's actually representative of the market. It doesn't mean you actually have an edge in the market. So the TLDR on this section is pretty simple. Come up with a true trading edge. What are your exact entry criteria and what are your exact exit criteria? And a good way to know if you have an actual trading system is the fact that if you were to explain it to someone else and they understood the entry and the exit rules, and then you came back and talked with them at the end of the day, you should have the exact same trades. And the reason I'm bringing up this obvious hypothetical is because if there's any wishy-washy in the middle there, if there's any gut feel in there, well, then that's not really a trading strategy. And your edge might be a lot more of guessing than what you actually want it to be, something actually backed in the market. I'm not saying it's simple, but it's definitely more simple than it's ever been. But find an edge in the market. And right now, there are many resources on the internet, specifically AI, where you can sit there for hours and ask it questions and questions and questions until you find something that is statistically interesting, which might mean that you actually have an edge in the market. And this brings us to major mistake number 2, sizing. Honestly, this one is pretty simple. People play way too big. Even if you had a phenomenal trading system that was right 80, 90, 95% of the time, if you bet too big, your entire account can still blow out. Put it this way, if you really like a situation, I'm talking you're overly confident and you bet 50% of your account, and then as it most likely will go if you have enough data points, it's gonna go south and you're gonna lose that 50%. So now your overall account is cut in half. So what does that actually mean? Well, in reality, that now means you need a 100% return just to get back to your break even of your initial account value. As you could imagine, the bigger the loss, the worse of a situation you're in. If you somehow take a 75% hit, now you need over a 300% return just to get back once again to break even. And trust me, you don't even want to look at the numbers if you take a hit larger than that. The point is, people bet way too big because they have the dollar signs in their eyes. They want those big returns, when in reality, all the successful traders I know, they let the profits and the gains take care of themselves. The best traders I know, they are absurdly meticulous on their risk. They are not traders. I think a better definition for them in reality is risk managers. Day in and day out, whenever they're looking at the charts, they ask themselves, if things go bad right now, how much am I going to get hit? All they do is obsess over their risk. And like I said, they let those gains and the profits and the winners take care of themselves. Now you might be thinking, okay, what percentage of my account should I be risking per trade? And obviously that's a difficult thing to answer because it depends on your trading strategy, your asset class, and many, many other things. But I can tell you one thing. I have never heard of a successful trader in the long term risking more than 10% of their portfolio per trade. And even that number, 10%, was kind of an outlier. We are kind of in a single digit game just because there's variance. Even with perfect setups, even if you're dealt pocket aces, you can still lose. So that's something that should always be in the back of your mind. Let's say you've avoided the first 2 pitfalls. Let's say you have a trading edge, and let's say that you've mastered your position sizing. Congrats. If I were to create a perfect trader, you're about 7% of the way there. Another 3% of the way there is pure luck. There's nothing you could do about that. I don't know, put a horseshoe above your door, get yourself a lucky rabbit's foot, I don't know, a 4-leaf clover, but that's gonna be outside of your control. 7% is you learning the rules of the road and getting very, very good at it. 3% is pure luck, which for those of you that don't have a calculator at home, means there's a leftover 90% of this pie to make a perfect trader. So what is this massive chunk that makes up so much of a successful trader? Well, as I've already said, and as you've already probably heard, psychology, discipline, sticking to what you actually know. Put it this way. If you show me a trader who says they've never had an issue with FOMO, fear, greed, guilt, tilt, revenge, or anything in between, well, I'll show you a liar. Good psychology, solid discipline, sticking to your trading rules is by far the most difficult part of trading, and yet it is the thing that you need to do the most to definitely be a successful trader. In my personal experience, there's something particularly hellish about trading. And I mean that in all sincerity. There are so many traders out there who know exactly what to do, the proper sizing, and yet when you're in the heat of the moment, you just mess it up. You break your rules for whatever reason. And of course, in the moment, we all have the reasons. And then afterwards, of course, when you blow out, you feel stupid, especially when you know exactly what to do and you just can't bring yourself to do it. So what's the solution? Well, a pretty obvious one is pre-planned entries and pre-planned exits. But if you're like me, a special type of a degenerate where sometimes you mess around with the pre-planned entries and the pre-planned exits, I've had to go to the extent of getting the robot, the computers, the system to actually execute the trades for me to remove myself, the weakest part of this operation, from the actual trading methodology. I think many of you watching could relate to this. I'm pretty good at trading, pretty good at knowing what I should do. I'm not so good at getting myself to do exactly what I know I should be doing. Like I said, it's definitely a special type of hell. So there you have it. If you master those 3 simple things, you're going to be a wildly successful trader. Unfortunately, it's not so easy to master. You need to find an edge, you need to create proper position sizing, and then you have to find it deep in your soul to have the discipline to follow the proper system and the proper position sizing. And as you're going through this journey, don't beat yourself up. It's not going to be an easy one. I know there's a lot of videos and influencers out there who tell you that, yeah, you should just start trading yesterday and it's the best thing ever. If you can figure it out, it is awesome. I'm telling you that, but it is not simple. In fact, I believe it is one of the most difficult things you could possibly do on this planet because it is such a mental test day in and day out. Now, if you're truly interested in putting yourself through this mental gauntlet, let me suggest 2 things. Number 1, use a paper account, use a sim account. Don't use real money. Use fake money, as in you're not risking anything, to at least figure out the mechanics. Is it the exact same thing as actual trading? No, but it's also the closest thing we have. And number 2, find yourself a community of like-minded individuals. Yes, I do have a trading community, and of course you can join. The first month is free. It's in the description below, but I'm not saying it's for everyone. You should find a community that resonates with you. They talk the way you do. They learn the way you do. It's a group of people that you truly enjoy hanging out with because, of course, there's going to be pretty bad times. So you have to find that social safety net of other people who understand how bad it feels when you get got, but also people who understand how awesome it is when you truly crush it. And folks, that's what I have for you today. If you master the 3 simple steps of finding an edge that is actually backed in empirical data, not just some random thing you found on the internet, then you can master the position sizing so you can overcome the variance. And then finally, if you can master your own psychology to follow your own system and the proper position sizing, that's exactly what you need to be a successful trader and move from the 95% bucket of people who end up worse off than when they started to the 5% of people who, for whatever reason, seem to post a bunch of Lambos and yachts on their Instagram. Anyway, do whatever you want with your winnings. I hope you absolutely crush it. And of course, I appreciate your time. If you have any questions, comments, or concerns, let me know in a comment below. And other than that, I'll catch you in the next one.